joining us now, likes Tesla and General Motors as well. Itay, why the upgrade? Why now?
Sure. Well, we're happy to have taken coverage here at TD Cowen of the auto sector. So we transferred coverage over. And yes, we did put a buy on Tesla, $388 price target. Look, Tesla is always a highly debated stock, to your point. But what we find kind of really helps the stock work ultimately, what we focus on are sentiment shifting catalysts. And with the stock down about 50% from the highs, and yes, Q1 will be challenging. I think that's pretty widely known. We do see a number of potentially consequential catalysts beyond Q1, both on the EV side and the AV side. And the setup, frankly, reminds us of last year's, where the stock was under a lot of pressure in the first half of the year before sentiment improved in the second half of the year. We see a similar pattern here as we want to be there for these potential catalysts that will come beyond Q1.
Well, you can go to they don't really have dealerships, but they have selling locations. There's one near me, and there's people that stand out in front in New York and other places with signs down with Elon Musk. Do you worry it's going to scare off Tesla buyers?
Yeah, look, both bull and bear cases have legitimate points. That is one of them. There are some brand concerns here in the near term. But the bigger issue we think for the company has been on the EV product side, just a lack of product renewal up until the Model 3 refresh last year and the Model Y that's being refreshed right now. And you do have a number of products the company's talked about that are going to be launched over the next couple of years. And product cycles tend to be great catalysts for automaker stocks to help revive market share. By our numbers, we think Tesla has actually lost quite a bit of market share in some of the heaviest EV counties in the U.S., and that it could lead to a recovery. Plus, there's a lot of other parts of the country where EV demand is still low, and new products could be the catalyst there. One of our themes in our initiation, Brian, is don't sleep on the U.S. EV market. With 2 cars per household, imagine a scenario where people wake up and say, I want to have one EV and one ICE vehicle in my household. If that were to happen over time, EV demand could inflect very quickly.
You just described my entire town. Here's the thing, though. GM just released a Cadillac Escalade EV that's like 10,000 pounds and like half the length of a semi-tractor trailer truck and starts at $130,000. I mean, I'm not picking on GM. There's a buyer for it. I'm sure they're smart people. That's why they did it. But, like, where does the EV market go? How much are we willing to pay for a car? And I bought an EV. I own an EV, SUV, that goes 30% less than it's advertised. Let's be realistic.
Yeah. Look, I think EV prices have come down. Escalade certainly is a high price point. But when you think about kind of sticking with GM for a moment, the Equinox EV, the Blazer EV, the new Cadillac Optic EV that's launching right now, and of course even in Tesla's case and other automakers' case, they are now becoming much more affordable. The EV market, we think, does need new product. New products help expand market coverage, and of course affordability is still a headwind, but it has gotten better over time. So we think as this market develops over time, there's still a lot of potential for growth. Again, to your point on your town, at 2 vehicles per household, our EV adoption setup is very different than the rest of the world. If we have one ICE and one EV across large parts of the population, that could drive much more EV demand than people commonly realize.